Welcome back to FlexCandle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. As usual, we're going to start from the higher time frames and work our way down to the lower time frames and look to see if we find any good setups. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. Okay, let's get into the charts, and we're going to start off with the weekly, and today is the weekly candle close, and we have about an hour and a half before it closes. It's currently 6:30 p.m. Eastern time, Sunday, and right now the 21-day moving average, we're above it, but the 21-day moving average is currently at 92,621, and the price of Bitcoin is at 93,740. So we're only like about $1,100 away from the 21-day moving average. A lot could happen from here to an hour and a half. You sometimes see as we get close to the candle closing, the daily or the weekly, we start to dip, and then after that, later on in the night, we could start pumping up. It's very important that we do close this candle, guys, above the 21-day moving average. If not, it starts opening the door for lower levels. So we are not safe until this candle breaks above the 21-day moving average. As you can see, this is the first candle that's attempting to do that, to hold that position. So it's very important that we do that. Something that I'm looking at that's very bullish is that the stochastics right now are pointing up. Let's zoom in on that. As you can see, they're pointing up, but we could easily fall back down. Look at this. Over here we went up, and what happened? We went down. Over here we went up. You would think it's going to continue going up. Nope, it went down, and then we went up, because something possibly happened similar over here. Hopefully not. Now, took away the patterns. Let me put them back on. If you guys are new to the channel, I want you guys to know that I have this currently on a falling wedge, and this measured move is to break out to about 117,000, 120,000. This is what it looks like to me will be happening, but for us to do that, we have to close this weekly candle above the 21-day moving average. And as we speak, Bitcoin is already falling. It's at 93,670. Let's take a look at the 4-day chart, and on the 4-day chart, we're starting to get toppy a little bit. Let's zoom into the stochastics, and you know, we still need some curvature here, so we could possibly drag here a little bit, so it's not too bad. And what I'm seeing here that's bullish is that we are above the 21-day moving average. We closed a candle there yesterday above that to confirm, but today's candle is starting to, you know, be a little bit bearish. It's starting to turn into a engulfing candle, but this candle has 3 days and 2 hours before it closes, so this could go up and down. It really matters what happens with this candle in a couple of days, so we can't put too much weight on that just yet. Okay, moving over to the daily chart, and on the daily chart, this is looking bullish to me. Was an inverted head and shoulders that broke out. Now we're starting to flag out. We're above the 200-day moving average, which is very bullish. As you can see, we've been above it for 1, 2, 3, 4, 5. Today would be the 6th day that we're above the 21-day moving average. That's super bullish. The last time we were above that many candles was over here somewhere, and over here we were there for a couple days before we dropped. And the 21-day moving average is starting to creep up. So remember, there could be some downside just because look at the stochastics. They've been dragging for a while, but now if we zoom in, we're starting to see some curvature down. So can this fall all the way down here, or is it gonna fall down and then curve back up and then fall down? We have to now pay attention to that as well. But as long as we stay above the 200-day moving average, which is currently at 89,196, we have to remain bullish. Now again, we're waiting for this 21-day moving average to cross the 200-day, and then from there, that's when I expect Bitcoin to make its next big move, possibly to about $100,000 once again. Now let's move over to the 22-hour. On the 22-hour, now we're starting to see some curvature here. It's starting to fall down, so this is telling me that now the daily could be possible that it is going to start falling down. That's why I like to look at the 22-hour chart. What's bullish here though is that the 21-day moving average, as you can see, is getting close to the 200 and is about to cross. This is what we want to happen eventually here. As you can see, the daily is a little bit more delayed than the 22-hour, but that's what we're looking for here, for it to eventually cross, and that's going to end up being bullish. Maybe this dips down a little bit and then it continues dragging and we pop up from there, but so far right now we're starting to flag out, so that's looking bullish to me. On the 12-hour chart, the stochastics are dipping down. Looks like we're going to go down, but we're still bullish. We're above both moving averages here. Take a look at the 8-hour. The 8-hour stochastics are starting to get overbought, but we could still stay down here for a little bit. We could even drag down there before it starts popping up. But something that is bullish to me is that the 21-day moving average has caught up to price, and this is pretty much flagging out. Let me put back the patterns that I have here, and this flag is a 4-hour flag that I drew, and as you can see, it kind of broke out here already, but we could easily fall back down into this pattern since the stochastics here still have to drag a little bit. Let me take off the patterns again. Now let's take a look at the 4-hour chart. And at the 4-hour chart, this looks bullish because the stochastics are low and now they're starting to kind of curve up. So it's possible that we go up, or again, like I was saying, we could go up, come back down, go up halfway, come back down. We don't know what's going to end up happening here, but for right now, this is pointing up, so that's a little bit bullish to me. It gives us some hope that we might continue going up. This candle is going to close also in about an hour and 23 minutes, and what I'm not liking here is that if we end up closing like this and the price does not go up, this is a red engulfing bearish candle. What does that mean? That means that this was a bullish green candle, and now the very next candle is overtaking this green candle and it's engulfing it. That makes it bearish. So what could end up happening is that we could actually fall down now to the 50-day moving average, which is at 91,224. If you guys remember, I believe it was last episode or the episode before that, I was calling that we're feeling bullish, but this could easily be a head and shoulder pattern. The shoulder, the head, and then I was thinking this could have been another shoulder that then brings us down to the 50-day moving average, and now that's looking more like a possibility. Now this is the flag that I drew on the 4-hour. If you guys remember last week, I drew this flag, measured move, we made it. I drew another flag, measured move, we made it, and then I drew this next flag, and the measured move to this next flag here I believe takes us to $98,000. So we kind of broke out of this flag already. So if you guys did take this pattern and broke out, maybe some of you guys took profit already. I definitely took some profits. Right now I'm not currently in a Bitcoin play because I'm seeing that this is a red engulfing candle and kind of does look like we might go down, so we have to see. Let's take a look at the 1-hour chart, and the 1-hour chart, the stochastics, let's zoom in, are pointing down. This is bearish to me. So the weekly and the daily candle closes in approximately an hour and a half, so this looks like for the next hour and a half it is probably going to continue falling down. So this is giving me the notion that we probably are going to fall down to about 91, maybe $92,000. It is quite possible. This flag did fill out here and now we're a little bit above it, but this is kind of bearish, so we have to see. And another thing is that the 200-day moving average is at 91,105. If we go to the 4-hour chart, the 50-day moving average is at 91,224, and like I said, this is engulfing. It looks bearish. This could be a head and shoulders that drops us down, which would then make sense for the 1-hour. If we lose, we already lost a 21-day moving average, and this is a big red candle. It does look like we might maybe fall back into this pattern or drop down to the 200-day moving average. It's very important that we hold this position above the 200-day moving average and then bounce off so we could retake the 21-day moving average. The 21-day moving average currently right now is at 94,076, so we're not too far. We're about like $300 away, $200 or $300 away, so it's possible that we can make it back, but these stochastics are showing me we might fall down. Now let's take a look at the 30-minute chart. The 30-minute stochastics, again bearish, starting to fall down. We're losing the 21-day moving average and we're starting to lose the 200-day moving average. This is bearish. Once you start losing it on smaller time frames, it starts going into the higher time frame. So let me show you guys. Let's go to the 1 minute, and as you can see, the 1 minute, what you guys see here, we lost a 200-day moving average and we just lost a 21-day moving average, even though we're starting to go up a little bit. But look, the stochastics are toppy, so this is bearish on the 1 minute. On the 3 minute, we lost the 21-day moving average and we also lost the 200-day moving average. That's also bearish. Stochastics are pointing up, but that might just mean that we're going to retest the 200-day moving average, and if we don't break it, we're going to bearishly retest it and then fall back down. So that's bearish. The 5 minute, below the 21-day moving average, below the 200-day moving average, bearish. Stochastics are low, but they look like they're gonna drag down here a little bit. 7 minute, below again the 21-day moving average, below the 200-day moving average, bearish. The 15 minute, below the 21, below the 200. So as you can see, in all these time frames, we've already lost the 21 and the 200. The 30 minute, we just lost it. We're trying to reclaim the 200. If we lose it here, then we know that, look, the 45 minute, the next one is going to be the 45 minute, which is at 92,900. So that's the next one, and the stochastics are pointing down. So if we lose this one, then the next big test is going to be the 1 hour, which we have to hold here. If we lose this one, then you guys have to go to the 2-hour chart to see where that one is. That one's at 87,000. So we cannot lose this 1 hour. So right now, overall, guys, what I'm going to tell you is it's looking a little bit short-term bearish, as in, you know, we're going to test possibly some lower levels levels, maybe to 91,000, maybe even down to 87,000. But overall, I still think that we're going to be bullish, and I still think we're going to try to reclaim that 100K Bitcoin at some point, either next week or the following week. But once again, in order for that to happen, we must close this daily candle above the 200-day moving average, and we must close this weekly candle by 8 p.m. Eastern time above the 21-day moving average. Now, one more thing before we go that I wanted to show you is I did make this flag the other day on the 15-minute, and this flag on the 15-minute would have broken us out to about $96,000. But as you can see, it did break us out, and it took us all the way to 95,391. Again, just because the measured move tells you is going to 96,000, 98,000, whatever it is, it doesn't mean that you have to wait until it fulfills that whole move, because it might not. So if you would have taken the trade, and you could have easily made profits and gotten out halfway. Sometimes you don't have to wait for the whole measured move. Sometimes it's not good to be too greedy and wait for that measured move. Sometimes if you're already in profits, it's good to take the profits out and then wait for another movement. So this is kind of like a flag that did play out for us. So right now, currently, I'm gonna take this flag away because that's the 15-minute. That's very short term, but we did technically break out of that flag, and we could have made some profits if we took that play. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.